Trade Executions Update. August 2026. July Pullback and August Stabilisation. July was a meaningful stress test for the strategy. After a strong first half, the portfolio fell by about 16% through July as several Nasdaq leadership groups reversed together, particularly semiconductors, chip equipment, storage, cybersecurity, and artificial intelligence infrastructure. That kind of drawdown is uncomfortable, but it is also consistent with how momentum-led portfolios can behave when crowded winners are hit by profit-taking. Through the 22nd of August, performance has turned modestly positive again, at about 1.5% for the month to date. That does not yet represent a full recovery, but it does suggest the decline has stopped accelerating and the portfolio is stabilizing rather than continuing to unwind. Nasdaq-100 Context. The latest Nasdaq-100 backdrop remains dominated by artificial intelligence, cloud computing, and digital infrastructure spending. Microsoft's July results again highlighted strong cloud and artificial intelligence demand, while Cisco's August update pointed to a networking supercycle and rising artificial intelligence infrastructure orders. Fortinet also reported strong second quarter results and raised guidance, reinforcing that enterprise security demand remains healthy. At the same time, the market has become more selective. Investors are still rewarding real earnings delivery, but they have been quicker to punish extended valuations, crowded positioning, and any sign of slower near-term momentum. That helps explain why July was weak even though the broader long-term technology narrative remains constructive. Why the dashboard metrics matter. The annual return, measured as compound annual growth rate, is about 24.1%. This shows that the strategy has compounded strongly since October 2022 despite periodic reversals. Total return of about 93.3% confirms that long-term value creation has remained intact even after the July setback. Maximum drawdown near -11% is important because it shows the scale of historical peak-to-trough stress the process has absorbed. In a Nasdaq market led by fast-moving growth stocks, this is a critical reality check on risk. A Sharpe ratio near 4.6 suggests that the return achieved per unit of volatility has remained attractive, which matters when leadership is narrow and price action can change quickly. Consistency of about 62% positive months is also relevant. It shows that the strategy has produced more advancing months than declining ones, while also reminding us that losing months like July are normal rather than evidence that the process has broken. Process over prediction. The strategy remains systematic. It ranks candidates, rotates monthly, and follows relative strength instead of trying to forecast every macroeconomic swing. That matters in the current environment because Nasdaq leadership has become both powerful and fragile. Trends can persist for months, but reversals can be sharp. The purpose of the process is therefore not to avoid every drawdown, but to participate in leadership while staying disciplined when conditions change. Outlook for the months ahead. The medium-term backdrop still looks constructive, supported by ongoing artificial intelligence capital expenditure, cloud demand, and digital infrastructure spending. If that continues, Nasdaq leadership may reassert itself and the portfolio should have scope to recover further. However, the next few months are still likely to be more volatile than the straight-line advance seen earlier in the year. Key risks include valuation sensitivity, earnings disappointments, interest rate expectations, and further rotations away from the most extended winners. In that setting, the most important takeaway is that July damaged momentum, August has begun to steady it, and the months ahead will likely reward disciplined execution more than aggressive prediction. Key takeaway. The portfolio remains materially ahead since inception, but the July decline was a reminder that strong returns and short-term stress often come together in Nasdaq growth strategies. August's modest gain is an encouraging first step, and the focus remains on disciplined rebalancing, risk awareness, and allowing market leadership to re-establish itself. Current example holdings: DOG, CSCOFTNT, CRWD, PANW. Additional content is available at Backseat Trader, https://www.backseattrader.com/. For an audio-visual version of this update and previous posts, visit our Strategy Commentary archive. https://drive.google.com/drive/folder/101bay_jack x9c0nf parts 4 USP equals sharing. View the video content on our YouTube channel, https://www.youtube.com/@backseattrader. Past performance is not indicative of future results. Investing involves risk.